Good morning, traders. It's 8:01 a.m. Chicago time on the 7th of April, 2022. It is Thursday today. This is episode number 2208. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Taking a good hard look at the convergent trading pre-market summary sheet this morning. Just a quick reminder, convergent trading is the trader development virtual prop community online. You can find more information at convergenttrading.com. I am one of the founders of that company. This is separate from edgeclear.com, which is the futures brokerage firm, independent futures brokerage firm. So, what is the risk posture? The risk posture is really mixed this morning. We are trading basically around break even. We're standing here with the U.S. indices down between, as you see it there, 8 basis points and 28 basis points. The Dow being weakest so far. We're seeing pretty good performance on a relative basis on the Euro Stoxx 50 and the DAX. The German indices are holding up pretty well. There's really not much. It is very, very quiet overnight in terms of news flow, including out of Ukraine and the Ukraine-Russia conflict. It's been quiet really after the FOMC minutes yesterday. So we had Brainard come in with that little kind of bombshell, and then we have the FOMC minutes, and it seems like the market is fully informed on what the Fed's intentions are, and so all in all, it's really balanced here. We are trading really right on top of yesterday's balance. We're holding steady. There's a high potential, given the minutes, there's a high potential of a 50 basis point rate hike on May 4th by the FOMC. That's the market's kind of taking a look at that. Really, it's the balance sheet runoff that is really important right now. The Fed acting as a private bank holds a balance sheet, and it's looking to reduce it, which means that it's going to have to go to the open market to do that. Key earnings begin next week: J.P. Morgan, BlackRock, and others. And then just keep an eye on the U.S. dollar. The U.S. dollar is very strong. It's likely to cause some headwinds for U.S. equities as U.S. products become more expensive abroad. Today, the calendar really, we had several releases. The ECB monetary policy meeting accounts came out this morning at 7:30. We had initial jobless claims, which came in very strong. Initial jobless claims for last week was very strong, came in at 166,000 versus forecast at 205,000. So many fewer people filed for jobless claims than expected. And then this morning we have Fed's Bullard at 8, speaking now, Fed's Evans, Fed's Bostic, Fed's Williams, and then this evening the current account for February for Japan, all low-tier numbers. Higher-tier numbers are going to be bolded in the sheet in front of you. Of course, you can always find this sheet on Convergent Trading's Twitter. I highly recommend you follow. You can find it at conv, C-O-N-V, trading. You have the URL at the bottom in the red box there, twitter.com/conv trading. This is posted. You can pull it up. You can download it, and so on. Turning our attention to the S&P, 203,000 contracts so far traded. The overnight inventory is completely even at negative 2%, really flat. really balanced. And then the high overnight is 44.96.75. I want to remind you that yesterday the high was 44.99.5. We'll talk about that for a minute. And then the point of control is at 44.75, which is an important reference. This is the low volume node in this area, and a key reference for yesterday. There's a stock zone there. And then 44.54, which also is a key reference in a stock zone area as well. So the ES, as I commented yesterday in the Conversion Trading Head Trader channel at the end of the day, that the trade is fairly orderly with a fair amount of structure. In my opinion, pretty orderly trade. The auction is really doing its job in a very transparent way, in my opinion. Taking a look at yesterday, here's what was expected yesterday. The primary scenario is we are likely to check that overnight low, push to the double O to that 4,500, which is the key magnet for the day. Why? Because it is the prominent composite low volume node, micro composite low volume, high volume node. It's a composite high volume node. It is a micro composite volume point of control. It is the century figure. And, in yesterday's case, it was the full session mid, the full session VWAP before the open, which quickly dropped. But we expected it back at the double O at some point in the session on the high. And then scenario 2 was also looking for a test of the double O and a drop to 50. And the market played scenario 2 yesterday before rallying after the FOMC. Yesterday, as the market was dropping, you could see in the order flow very clear. Yesterday was a great day to replay to see how order flow can, despite what we expect, order flow can push in the other direction. Took several stabs at the long yesterday and finally got some relief. But here's what actually happened. Let's take a look at the intraday. So yesterday we open up. So remember the blue profile, this zone here is RTH. RTH being defined as the cash session. So 9:30 to 4 p.m. Eastern US time. The orange is Globex. Okay, Globex. That's everything outside of RTH. I plot those separately to see what the auction is doing while the underlying issues are operating and not. So we get these multiple lows right here in the 44.60 region. We end up pushing down and through finally with a low of 45, basically 44.45, and a high yesterday of 4,500, the double O, 4,500 right up here. And so this yesterday really played scenario 2 pretty well, except it did it in a kind of a backward way. But as we were pushing down, you could see that there's a fair amount of support here. If you look at the overnight profile in the prior session, you could see that it was pretty jagged, but the point of control ended up shifting to the low end of the range. We held a lot of volume as a result in the day session. We kind of traded the same region here at 44.80 or so. And then tonight we have the point of control, the overnight point of control at 44.76. We are really building a ton of balance in this area here. We're opening in a region that has an awful lot of balance in it. If we look at my active chart, let's turn off the DOM here for a minute. If you look at my active chart, you can see that, it's really just test up, test down, impulse continuation, break the IB, the mid, pull back, continue, test the extreme. So now we're testing into that magnet again towards 4,500 and then coming all the way off. And so what we're doing is we're repeating yesterday's trading in the overnight session. We're going back and forth, back and forth, back and forth. Delta is pretty flat on all three sizes. And overall, it's not really making commitments this morning. So coming into today, let's take a look at the review here real quick. This is my trigger chart on Investor RT versus Edge Pro X. Just a lot of back and forth, and you can see there's just so much noise in here, a ton of noise. There's a ton of noise, but in the overall picture, it did end up performing exactly as what we had planned, with 4,500 shutting off buyers, and down below we were expecting the 50 to 55 area. We ended up putting in a low, the IB low right at 55. Remember, the 55 to 50 was expected to be support. We did push through to 45. This looked like it was going to end up selling off, and then we come right back, pull up to the RTH VWAP, and then from there stage a run up. This was a very balanced, it's an active price seeking session, but in a very balanced way, right? So overall, the market mostly traded between 44.55 and 4,500. As I said yesterday, we're expecting about 50 to 55 points of range, and that's basically what we got. We got almost exactly 55 points of range. So carrying that into the current session, we have a profile that's mainly balanced. We have a point of control. Let's clean this up. We have a point of control right on top of yesterday's aggregate point of control. Same exact price, basically. And then we have the action currently with the point of control, VWAP, and mid right on top of each other, on top of the 200-day SMA. This is just another poop sandwich, as I call it. There's a more crude term for that, but this is kind of a just a noisy area. We are below the 100 SMA. We are above 100-day, the 200-day SMA, and we are coiling. And I expect that to carry through to today. I'm not seeing any catalysts. On deck, on schedule. Some news event may come out. Yes, Yellen's going to speak, but it's considered low tier. It doesn't even show up on my 2-star or higher tier calendar. It's not expected. She's not expected to provide for anything significant today. So to me, this looks like it is balancing out. We sold off on Brainerd, and we have found ourselves balanced, and we're likely to continue to remain in balance here for the session. Balance breaks above 4,500. We left a gap open yesterday. We left a gap from 44.9950 to 4607.75, I think, if I remember the numbers right. We left a gap up here, an unexplored area right up here. So if we break the 4,500, I would look for it to pull back, retest below, and hold. And as it starts to push higher, I would aim for that 07. And then from there, you're really looking for it to push into the 45, 33, 36. Can somebody tell me what is the what is there at 45, 33, 36? What is there? Why is that significant? Anybody? I'm hearing crickets. What's there? Let's review. Remember, memorize your levels, people. Memorize your levels. Look at that. Boom. No. The daily picture. What are the key areas on the daily? You got to know these. You got to know these. Know what they are. This is the composite point of control for this entire region is 45.36. We closed above it last Friday after poking below, and we launched higher, and then we closed below it on Tuesday, and then we continued lower. We moved away from the point of control. So 45.36 should be in your consciousness for the S&P. You've got to, don't just look at your chart. Know the narrative, know the map, know the map. This is a major area. So if we break 4,500, we're breaking out of balance. That doesn't mean you get long the breakout. I don't. Look for it to pull back. Look for it to pull back, hold in that 4,500, 44.96 area. And as it turns up, now we're looking for a long, and 36 becomes the key target. 36 is very attainable from 4,500. That's only 36 points. It can do that about 4 rotations. These are the kinds of facts that you need to remember and know in order to, when you're putting on a trade, to have conviction and confidence in what you're doing and not to freak out just because it went through your bid or through your entry by 2-3 ticks. Keeping that big picture in mind helps maintain the overall composure in order to hold the trade to its full effect. So just remember to keep that in mind. Always, look, if you wipe everything away from your chart, okay, this is like holy grail advice here. If you wipe everything away from your chart and simply look at a higher time frame and just focus on a map of prices, like here's a key test area, here's a key rejection area, here's a double bottom, here's where it needs to break, it needs to just smash through, and if it smashes through and holds, here's where it's likely to find the next resistance. If you think from that perspective, as opposed to all of the price action, order flow, all this influencer YouTube, crap, you would be a much stronger trader eventually, and then you can layer in this other stuff in order to get better R factors or to perfect your entry as best as you can or to perfect your execution. Most people go at it backwards. They're looking for some moving average thing or some crossover to trade off of without having a map or a narrative in mind. That makes you a weak hand if you're doing that. This is the best advice I can give you right now. We talk about psychology and whatnot, but none of that holds a candle to the fact that there is no edge. Without an edge, you can talk psychology all day long. It's not going to help. Okay? So I'll get off my soapbox here for a minute and get back to taking a look at what's expected for today. So here's what's expected for today. Just setting the chart up. All right, so here's my price map. I'm sharing my homework with you. I'm not charging you a penny for this. This is my effort, but these are the stock zone levels, the gray bands that you see on this chart. This is my price map. I don't outline why the level is important. It's just I know where it comes from, but I did introduce these highlighted areas, the key resistance, key magnet, the key over under stock zone, and the key support. That's key resistance, key magnets purple, key over under is like a lavenderish color, and green is key support. So what am I looking for today? Open auction. Respond a little bit, and then I'm looking for it to try to squeeze. It is not selling off after this entire drop here. We have not continued to sell off. I'm looking for it to squeeze back to the 4,500, fail on the first run, and then eventually push through the gap zone. The gap zone to 47.07. If the low that I'm putting on this chart, if the low is somewhere in the 44.67, let's call it 44.60, I'm expecting it to stall out up here in the 07 to 14 area. Okay, so that gives me my day range stat to the upside, and I'm looking for it to cap out here between the 07 and the 14, and then come back and hold this very big magnet right here. Come back and finish somewhere around the 00, 96, 44.96, 45.04, that area there. Okay, we have options expiration next tomorrow. Weekly option expiration, that may be more of an impetus of the 4,500 kind of getting pinned a little bit, although the volume's not as big as the monthly options. So that's one scenario. The rejection scenario, which is the better trade in my opinion, is an open auction that attempts to push into that 96 area, finds rejection just like we saw yesterday right here, finds rejection, comes back to the open, consolidates, and starts to release to the downside. If we take out the 44.60, which is the over-under, and start attacking that low from yesterday at 44.44, then we are likely to make a run through the 44.40, and we're looking for the support level to be tested. The support level coincides with the 50-day moving average, and that level is at 44.13, and that becomes where we're likely to see a response and a reaction, and that gives us the day range, and it gives us a break, a true continuation from the Brainerd deal, from the impulse down. So we have a bearish flag that's forming a consolidation, but I'm seeing a lot of order flow wanting to buy large lots. Yesterday we're buying all day long. Here you'll see it in this chart right here. You can see the large lots were positive on the day. Very large lots were slightly negative, but mostly at the close, and it's just small lots selling, bringing the delta down. But large lots were accumulating all day long. You could see it on the tape that they were lifting. And large lots is anything above at 10 contracts to 100 contracts is considered a large lot. It is the majority. It is the heavyweight in the S&P, and this is on a consolidated tape basis. So that's the plan. I'll leave you with that. Are you following what's going on here? Are you following the idea that we can't just come in and just say, well, I'll see what happens for the day. I'll look for my little 5-tick gain, and I'm happy when I get it, and I'm depressed when I'm not. You're looking at the big picture. You're trading as if you're a floor trader, somebody in the pit, taking positions that are big and against the short-term flow, if necessary, with a big idea in mind, understanding that the market only moves because it's an auction and there are reasons behind the movement, and our job is to be a kind of a lab technician, constantly monitoring what has it done, what's the price doing, whatever, despite what the news says, despite what CNBC or all these shows say, despite what that good-looking influencer that you watch says, whatever, you're trading from a level of power, in my opinion, on a day trading basis. I think this is as good as day trading gets. And you can then layer in your fibs and whatever you like, whatever's your favorite, but having that base is something that you can build a career on, in my opinion. Okay? Good luck. I'll catch you tomorrow morning, and be safe and make sure you're monitoring risk. Okay? Take care.